You know, there's a quote that says every battle is won before it's even fought. And in trading, there is a similar approach. Your preparation before entering the market, before taking a trade, your mindset before that happens is all key into you being successful. And that may apply even if you win the trade or lose the trade. But the key here is psychology. Every single thing that you should be doing before you enter the market. All of this is connected to your psychology. In today's video, we'll talk all about how your preparation before entering the market plays all into your psychology and how you can improve on it day by day. You ready? Let's go. Welcome back to the video, guys. So today we continue our conversation on trading psychology, and we're talking all about what needs to be done before you enter a trade. Let's get right into it. So number one of the first things you want to think about before you enter a trade, you should ask yourself, how do I feel today? You know, I realize this is a question that many traders, many people don't ask themselves at all. How do you actually feel in that day? One of the things you don't want to do when entering the market is trading angry, trading depressed, trading after a big loss, and that could mean you lost somebody who's very important to you, and I've been there, or that could mean after something traumatic happened to you. You don't want to use those strong emotions to fuel you as you enter the market. Sure, these could be motivational. These emotions could definitely push you forward to be a better person. But when you're entering the market, it doesn't necessarily work that way. You need to get those emotions under firm control before you start trading. Because believe it or not, that strong emotion does not translate to more wins. As a matter of fact, more than likely it's going to translate to more losses in the Forex market. So, how are you feeling today? Ask yourself this each and every day. Are you in the right mindset to trade? Do you have a headache? Are you angry? Are you depressed? Are you sad? Whatever it is, ask yourself, am I in the right mindset to be trading right now? Because depending on the strength of these emotions, if I can't get it under control, then I will not be successful as I enter the market. You know, a quick story for you guys. So when my father passed away, I was just about, you could say, a year and a half into my trading journey. And I was, obviously, you can imagine, upset. I was depressed, sad, all types of emotions were going on. And one of the things that I wanted to turn to kind of cope with that type of difficulty was trading. And I wanted to use that as a fuel to boost me into being the best trader possible. And I thought that even though I was going through so much pain at the time, I thought that this was going to be the pain that would fuel me into becoming the ultimate trader. And the truth is, it was not. The truth is, trading with all of those emotions boiled up inside really severely affected my trading that month. I had blown account after blown account after blown account, all because I was trying to force my trades and force my way into becoming an ultimate trader. And the reason why I share this with you guys is because I know a lot of you are fueled by similar situations. Maybe you're even fueled by the fact that you want to leave your job, or you want to just completely change your situation or make a better life for your parents. And as much as that should be motivation overall for you, the way you should be using that is a means to make sure that you never quit, that you don't stop in this journey no matter how difficult it gets, no matter how many downs there are, knowing that there has to be ups, because for what I'm doing this for, my why, in other words, I cannot stop until I succeed. Now, that is completely fine. However, when you're entering the market and you're analyzing trades in the market, those emotions don't apply. Those emotions don't make things better. You need to be clear-headed, level-headed to make sure you get the best results possible out of each and every trade. That is very important. Make sure you keep that in mind and keep your emotions in check whenever you're entering a trade, and ask yourself before you even get into the market, how do I feel today? Now, the second thing you need to ask yourself is, how much am I willing to lose? It'll surprise you how many people don't ask themselves that, yet they get so angry when they lose an amount that they weren't anticipating to lose. You have to ask yourself that question. You will not win every trade, no matter how great of a trader you become. You will lose trades. But if you come into a trade knowing how much you're willing to lose versus just losing a certain amount, and it could be low, it could be medium, it could be very high, then you're going to affect your psychology. Your emotions are not going to be in check after you lose such a large amount because that loss has severely affected your capital. Now, before we enter the market, one of the main reasons why we use a stop loss is not only to just protect our capital, but it's also to protect our psychology. You don't want to suffer such a severe loss, especially one that you didn't account for, because at the end of the day, it will affect your trades moving forward. It'll affect how you execute your trades. Maybe you see your setup and you're hesitant, and you don't want that when you are trading your strategy. You want to make sure you execute each time you see your setup and it fits your parameters. But that will be affected if you're not keeping in check how much you are willing to lose. So that being said, before you enter a trade, ask yourself, how much am I willing to lose? Will I be okay with this? And going further than that, think about your next move if you do lose that trade. So if I lose this amount, am I allowed to take another trade? Do I take half the risk? Do I keep the same risk? All of those things have to be in alignment, because when you do start losing money, your psychology is kind of out of whack. And all that you have to rely on is what rules did I set in place before I entered the trade. You see, trading psychology is so delicate. A lot of people think it's about building mental toughness, and where there is a part of that is very much true, another part of it is sometimes it's really just understanding yourself and where you are weak. And when you understand where you're weak, then you know how much you need to prepare when you get into certain situations. Meaning, if I know I'm a severe revenge trader, I will make sure I know exactly how much I'm willing to lose. If I do lose that amount, I know exactly what my trade risk is going to be after that and when I'm going to cut that off. So the reality is, you're more so trying to manage your emotions than change your emotions. This is what's going to help you find much more success in your trading. The next thing you want to ask yourself are, what are my profit goals? Now, it may not seem like a very important question to ask yourself, but it's important in terms of managing your trading psychology. For example, if you're a scalper, then you might tell yourself that once I get my 20 pips, I am satisfied. So that is going to be my profit goal for each trade. Now, the trade may go off for 200 pips, and that can affect your trading psychology if you're not securing yourself as what type of trader you are. If you say you're a scalper, then whether that trade goes off for 30 pips or it goes off for 300 pips, you should be just fine taking the amount that you're willing to take, because you know that ultimately in this market, you're not going to catch everything. But if you do have a set target that you're willing to catch and that you know you can catch almost all the time, then you set yourself up for success, and it doesn't matter how much the trade really went off for. The same could happen in reverse. If you're an intraday / swing trader, a lot of times you're taking loss after loss after loss, but when you analyze those losses, you realize I was up as much as 25, 30, and 40 pips. Why did I just take that? Well, you chose to be an intraday / swing trader, and you have to be okay with that. So that means some moves, yeah, you'll be up 20, 25 pips. And maybe that doesn't set the parameter for where you move your stop loss up and you lose that trade. That will happen to an intraday / swing trader, but you need to be okay with that. If your profit target is going to be 70 to 100 pips and you don't move your stop to break even until after 40 pips, then that is your strategy and you need to stick to that. Now, if you're not finding much success with that strategy, sure, you need to analyze, tweak things a little bit and ask yourself, is this the right type of strategy for me, for my style? But ultimately, a part of protecting your trading psychology is knowing that whether you're a scalper, you're going to miss out on some big moves. And if you're an intraday to swing trader, you're going to miss out on a ton of small moves. But either way, it's all about coming to terms with the fact that this is who I am and this is what I'm comfortable going for. And ultimately, whatever happens, happens, but this is what I'm sticking to. Now, if you could do all of these things before you enter a trade, you're going to put yourself in a position where you really get on top of managing your trading psychology and you really put yourself in alignment to being a very profitable trader. So ultimately, trading psychology does not start once you enter a trade. It starts even before you enter a trade. All of the preparation and time that you spend getting ready before the trade will be the difference in you winning or losing the battle. So I hope you gain value in this video. I hope each and every one of you finds better ways to prepare before you even enter a trade. And let's continue to make progress and become the profitable traders that we all should be. So until next time, Jordan the Maestro, peace.